Welcome back. Now, as expected, the Sarb has left rates unchanged at 8.25%. It was a unanimous decision. And joining me now as we reflect on that decision are Frank Blackmore, lead economist at KPMG, and Tertia Jacobs, economist at Investec. Now, as mentioned, we all expected it, a unanimous decision from the Sarb. Let's talk about your initial reactions to the statement. I'll start off with you, Frank.
Well, the initial reaction was expected, and the reasons were, I think, because of the uncertainty in many areas of the forecast. The governor did mention the risks were balanced at this point in time, but there are serious upside risks, as we had mentioned just before his sort of presentation of the decision. So not much unusual in there or different than what was expected prior to the speech.
Now, Tertia, that tone of Lesetja's tone rather was quite hawkish, right? Does this change any of your expectations going forward?
It sounded, I hear what you say, he sounded hawkish, but I would interpret the message as neutral, like staying on hold with the risk that any of the risks may materialize, right? But in the context of these risks, they will remain.
We've just lost you there, Tertia. We've just lost you. I think we have you again. You can continue.
Am I back?
Yes.
Would you like me to repeat anything or?
Just continue, please.
Okay. So, so the statement for us was neutral. Waiting to see how many of the risks materialize, because that's what happened last time a few times. So we expected the first rate cut to materialize in May. So that gives us another 4 months where we will get a better picture of how the current inflation rate has evolved in this type of environment, and then we'll see where the inflation rate now for year end going into the first quarter could be. So it's actually very much a wait and see dynamic. We also saw with the Reserve Bank's interest rate forecast, according to the QPM, that there's 75 basis points of rate hikes priced in. So that is what's also priced in by the market. So the statement in itself has not elicited much reaction because it was neutral, waiting to see how many of the dynamics will unfold.
Now, with these upside risks, Frank, it doesn't seem like Governor Lesetja is keen, or rather seems like he'll cut rates anytime soon, right?
No, I think you're right with that. And he mentioned a couple of reasons for that. So remember, my previous comment was there's a lot of uncertainty. Firstly, I think he highlighted the fact that growth globally is not on a strong foot. And in South Africa, this is also true. So the environment in which we're looking at is not too great. Then he said expectations are still not anchored to the midpoint. He mentioned figures for business of around 5.8%. And 6.1%, which is way above the 4.5% that one would expect to anchor expectations on under those conditions. I think he also mentioned that there, besides fuel and food and how they impact inflation, he mentioned there were other things that the public sector could do to help bring down inflation, and he's done this, I think, for the last couple of months. One is to limit the size of public debt. Secondly, any energy coming online will help those growth prospects and help to sort of soften the inflationary effects. He mentioned admin prices. We could keep admin prices lower, and then obviously increases in sort of labor costs in line with sort of production gains. All of those 4 things would help to moderate inflation coming in future. He did also mention in the Q&A that, remember, this is not a time-dependent sort of thing. When are interest rates going to be reduced. It's rather a state-dependent thing. In other words, in our opening statements, I mentioned we will see rates come down once the bank is sort of assured that the 4.5 target or thereabouts is going to be sustainably maintained. And I think that was an interesting point by the governor.
Frank, I just want to stick with you for a bit and talk to you about the tough balancing act the Sarb has to do when it comes to introducing those rate cuts. I mean, if we do cut too quickly, we could have an impact on the credibility of inflation moving forward and consumers. And even if we cut too late, right, it's still going to impact consumers, pushing them deeper into that, tough economic environment, that tough cost of living crisis we're currently facing.
Yes, I think that's exactly right. I think the latter is probably at this point more dangerous, especially for the business side. Remember that rates have been high for quite some time, and that means if you're running a business, especially in a low growth type of environment, where your sort of sales revenue can't pad your financials too well, it means that you're taking cash from other areas of the business in order to service your debt and make sure you remain in business. And obviously, over a long period of time, that reduces the resilience of businesses, because if they then hit with an additional shock, let's say decrease in sales, or if they have to undergo some unforeseen maintenance, then they have only that same pool of cash that is now paying down debts, etc., to go to. And obviously, we don't want to get into that position. On the other hand, we don't want to move too early as well. I think it will be a balancing act, but for a change, we're not in this boat alone. As we mentioned before the minister, before the speech by the governor, is that this is a global phenomenon. The reasons might be slightly different from one country to the next. And therefore, it's not only us having to guess, let's say, on a demand sort of basis, when is the right time to cut rates. I think the general mood will be quite clear when that time will come.
Now, Tertia, we talk a lot about these rate cuts, but with this, as you say, neutral kind of statement, as well as the upside risks to inflation, can we comfortably say that we are really, really at the end of the hiking cycle?
That's a very difficult question, and as we discussed during the interview, it's so much contingent on factors outside our control. It's got to do with what happens in the Middle East. Can El Nino get more severe? Can there be another local event, for example, that triggers the rand to depreciate quite sharply, as we saw in May last year? So these are all the unpredictables that the governor tried to capture in the balance of risk assessment, and that's why they remain data dependent in case any of these risks materialize, then leading to an inflation trajectory that's actually rising instead of moderating.
Now, we did see an addition to the MPC 4, and now it's they've added David Fawkes to the 5. Any reactions to the addition to the MPC? Governor Lesesha Kganyago did mention that they're still looking for a DG to replace Kuben Naidu. Let's start off with you, Frank.
No, I don't think it was. I think, as the governor explained at the sort of towards the end of his presentation, it just makes sense to have an uneven number of voters, and because that means that he doesn't have to count his vote twice, and I think that's all they did. Plus the fact that the decision was unanimous. I think things could have perhaps been a bit more controversial had it been a 3-2 split or something like that. We would have wondered. Where does David Fawkes fit in, and what is his thinking about inflation? But that didn't happen. So I think in this particular MPC, I think it was a relatively safe bet to just put a fifth vote in. And I'm sure, obviously, he has a lot of knowledge about monetary policy for him to be sitting at that table.
Let's bring it back to you, Tertia, and talk about just the leadership or the change in leadership that might come this year within the Sarb, with a number of MPC members' terms coming to end.
Yes, so I think it will be all a function, of President Ramaphosa, because the governors get appointed by him. So I think where we stand now, in the context of the election, the inflation trajectory, continuity is very important.
All right, so unfortunately, we have to leave it there. Thank you so much for joining us today. That was Tertia Jacobs, economist at Investec, and Frank Blackmore, lead economist at KPMG.